to be an action being made. And sometimes that action can say, I don't want to buy because I'm too A, B, C. Just be real with the whole process with yourself and just remind yourself why you're buying, and then make a decision. But to get information, and then get that information, put it under your pillow and sleep on it for the next 2-3 months, it's not going to do you any good.
So, we all sit and talk about our clients behind their backs, mostly nice things. It all comes with the best of intention, but sometimes we kind of pick on, there's some common traits that pop up every now and then. And they're common traits because, we're seeing hundreds of different clients, and some of them are basically the ideal investor where they spend the right amount of research, time and effort, but then they've got enough drive and tenacity to actually act. And then there's these two other personas that, I think inherently in the office we have them, but then also our clients reflect them, where you've got the analyst, which just sits and does all the work and research, spins around in circles and gives himself a headache, but doesn't take any action. And then we've got the activator. So the person that takes all the action in the world, doesn't do enough homework, and tends to be a bit of a gambler. And I can certainly resonate being a bit of an activator, and Charlotte's probably a bit more of an analyst. How do you guys feel about our clients that sit in either side of those two quadrants?
Sam, go. Take the floor.
Now you go.
I've got some. Some clients are probably can do your head in a little bit, but then again, they're probably just being on the more safer and precaution, like to taking their own precaution, which is good. We always encourage to do your own research, but I think that you can fall into the trap of doing almost not too much research, but you find yourself in a tumble dryer of information where you end up doing nothing. Like you just don't end up
paralysis.
Yeah, and then they're always the ones to say, "Oh, I don't know, I missed it," or "It's my time's over," and then they'll end up never doing anything in life anyway. But I'm sure Sam has some feelings on over analyzing personas.
I feel like I always attract those.
Why's that?
They always come to me. I don't know if it's the vibe that I give off or the manifestation that I'm sending out to the world. But those analytical, what do we call them, Dom? Analysts?
Headaches?
Headaches. The major headaches. What I really like about them, let's start off what I really like about them is that they're keen. There is some kind of drive in them that they want to do something. And I mean, that gets discovered straight away when I meet them. And I feel though that's, I guess, the common ground why they want to purchase. But then there's the whole lot of emotional baggage that just comes along with purchasing, and we become this, I don't know what you like to call it, but it just becomes a very big, constant therapy session about, why they're buying and why they need to buy and et cetera, et cetera. And I'm all about trying to guide clients into, investing into property. But then it gets to a point whereby, if you're nervous, I understand, but, it also takes a bit of a leap of faith. And you gotta, and you gotta it takes a bit of courage also to flick that switch and action something. So in other words, if you're listening and you're one of those, stay away from me, please. No, jokes.
But it's funny to say that. I think the reason why, look, we catch a lot of these analysts. They come to us because they want information. And then I think the reason why, Sam, you've got so many analysts, why you've got such a big headache, is because you're so giving, right? You give a lot of your time, you give a lot of your energy, you actually deeply care about the people that you're working with, and you feed that analytical side because you are a bit of an analyst yourself. You do a lot of homework, you're a developer, and being a developer has meant that you've got to research the market thoroughly, you've got to know who your different your planning consultants are, your architects, what your geotechnical report's going to be. So you are a bit of an analyst, and I feel like that that people gravitate towards you. I live with an analyst, and it can be a huge headache. They're very, very in their own head. They look at every single thing, and by nature, they're very distrusting. It's very hard to gain. I don't know if you guys have noticed this, but it's very hard to gain the trust of an analyst because they're so independent. They're so strong-willed that they're very set in their ways, and it takes a very long, slow, and deliberate time before you feel like you've connected and you've got enough of a tight bond that they will actually trust you. Like I've been with Charlotte for 7 years, and still, we battle, and I have to show her spreadsheets and reams of information before we go and buy a property. And fuck, I do this for a living, man. You think you trust me? Getting married, doesn't trust me. So it takes time. It takes a lot of time.
Yeah. Do you think that? Well, I reckon. So the internet, I think you can find any answer that you want to read, right? So if they're going to use the internet or they're going to use their own sort of research, I think that they're going to find. I've sort of found out this my own way. You're going to find the answer you're looking for, no matter what. Like whether or not you want to tell us something's going down or up, or if you want to look at if it's going to be sunny tomorrow, if it's going to rain, there's going to be an answer for you to find the right, to agree with your own head. So I think it comes to a point where how much do you read online versus or your own research versus the level of you've got to just make a decision. Like where do you think it falls in the line? Is it 50-50? Do you overcompensate on the internet, or doing your own research and then not making a decision, or where do you fall? Like how much is enough?
I love that. Dr. Google, right?
Yeah.
I love that. Whatever you look for, you're going to find. So if you're looking for problems, you're going to find problems. And there's always a problem with every single deal. Nothing is perfect.
Or go speak to your friends or your families and, ask Eddie the expert of what he thinks. He probably doesn't own any property himself, but he'll tell you not to buy it anyway. So there's that one fun aspect. But the way I see it is do your due diligence. You have to. And you don't take everything for gospel, but at the same time, just know that sometimes when information is given to you, it's derived from some kind of factual source. So you can't just make things up as you go. So if these analysts that deal with me, sometimes I feel when I give them information, they want to go and they want to topple, or they want to go, they want to get more information, and then they want to make sure that my information is correct, and then their information gets debunked because they've got more information. And I'm just like, you're never going to buy because the proof's in the pudding. You're in a market you buy where things are running, things are being sold, and I just feel at the same time they're just procrastinators by nature. And to me, it just comes down to sometimes you're either really nervous and you like to waste your own time and my time with you. So yeah, like I'm all about due diligence. But there comes to a point where you really need to really, like there has to be an action being made. And sometimes that action can say, I don't want to buy because I'm too A, B, C. Just be real with the whole process with yourself and just remind yourself why you're buying, and then make a decision. But to get information, and then get that information, put it under your pillow and sleep on it for the next 2-3 months, it's not going to do you any good.
That's a really important point. You've got to make a decision, because I feel like analysts will fall into old habits and just keep on analyzing because they don't want to act and they want to delay the decision as long as possible. And that's a bad habit because you can extrapolate that over everything.
Yeah.
If you want something, you've got to call it and either go for it or not. Don't just keep on spinning and causing yourself turmoil because you just keep on doing the same thing you've always done, which is just fucking analyzing everything.
But then on the you flip the coin and who's and then we deal with a whole different type of person, don't we?
A gambler?
Yeah, the roulette table spinner.
Yeah, look, I can resonate with an activator or with a gambler because my first impulse is to jump in and act. I hate sitting still. I hate feeling like the fear of missing out turns my stomach in knots. I feel like I'm missing out on everything all the time. If I see a property going for sale, even if I can't afford, I'm like, that's such a good building. I can't believe I missed out. You know, like the idea of having an idea, I get energized by wanting to run at it. But the problem is I've got to fight my baser impulses because unless you do your research, you're gonna make a severe mistake. You're gonna miss some of the devil is in the details. And as an activator, you tend to see the bright side of things, and then you kind of put the blinders on for stuff that you don't want to know. You know what I mean? Like something could be telling you, hey, this is a wrong decision, but you'll kind of block it out because you want to get it done. Kind of that pig-headed running at it. What advice have you guys got for that type of person, activator, gambler kind of personality?
Stop being a big fat tease. That's my advice. Stop teasing yourself by trying to impulse, take a step back. There's information that's given to you. Have a good read of it. See where that sits with you in terms from, your position financially, and see where that sits in terms from a strategy point of view in your portfolio, and then act. But I really like this kind of clients is because, again, they are the eager ones, but I feel like they take one step forward very quickly and then they'll take 2-3 steps backwards because they've probably scared themselves out. Whereas the opposite of what we were talking about before, they probably take 10 steps backwards, but maybe that one step forward is the actual decision step. So, so I think my advice is it's a process, and purchasing, I guess, your first or your fifth is a journey in itself, and take your time in doing it. But just also know that impulse. Look, I'm completely empathetic with impulse buying. I've done some good impulse buys myself that have rewarded me, and I've also paid the price for. So, just take a breather, I guess, when you're looking at it in front of you.
What happened there? If I could dig a little deeper, I know that you've where did you make a mistake? Kind of give us an idea of what kind of mistakes can happen if you are that gambler, impulsive type, or you want to dive into something. What's some kind of stuff that you've been impacted by?
Yeah, sure. Just very quickly, I did a little cosmetic renovation out in Preston in Melbourne, and it was this really 50-year-old Californian home, and I thought to myself, I'll go to the auction if I buy it cheap. I did a little estimate. I went in there only a couple of times. I get great cosmetic reno, very rentable. Probably can flip it, make my money that I've probably triple my money within 6 months. Standard, DIY issues happened. I went in the property, and I guess I should have did a bit more due diligence. That there was a lot of structural issues in the property itself. So when I was in the middle of this mini renovation, budget just got blown out, and because there was one issue after the other. So when I sold it, I actually made a third of what I projected to make, and I told myself if I just took a little bit more of some really good advice around me, probably took an engineer through, et cetera, I probably could have I could have probably foresaw this and made a bit more of a wise, informed decision. So that was just one example of me being this roulette gambler that didn't pay off so well. So
did you survive though, Sam?
Oh yeah, look, I got rid of the problem, that's for sure. But yeah, definitely, I survived.
You know what I mean? Does it come to a point where it's like you just had, I don't know, not like the old you had a crack story, but like, if the risk, I'm not talking putting millions and millions of your family dollars on the line and whatever to make the risk, but your risk, it wasn't a big W, but to go back on the point before we made, you still had the go at it. You learned probably more lessons from
but it was novice. It was novice amateur, purchasing. So it was definitely impulse. Went to the auction, saw it only twice, thought I could do it. So yeah, just some honest blunders that I've had in my life. So, but you could just learn from that and probably find the balance into wanting to make a quick buck to probably doing some homework on the property. Yeah.
Oh, look, I can empathize. I did a quick cosmetic renovation, and when I went into the bathroom, we pulled the floor was a bit weird, and we pulled it up, and then it meshed. It was not waterproofed at all, so the whole floor fell out. Oh. And what was supposed to be, a $5,000 quick little $10,000 thing was a mess.
Yeah,
it was a mess. It was a hazard. Someone could have fallen through the floor. It was an absolute mess, and even to this day, we're still working on some bits and pieces. So, slowing down, doing your due diligence. I certainly can empathize there. How about you, Louis? What are your experiences with this kind of gambler mentality, personality? What's some of the biggest issues that you come across or notice with this type of person, or something they can learn about it?
I will. We talk about there's the gambler personality that we just spoke about, but I reckon there's also what comes to their own probably detriment is, I would probably, in my experience, ego. It's like they can't trust the information being given to them, because not they're always right. They may be right. They may have made one or two right calls before, but in saying that, I think it comes to a point where they've got to actually trust in the information being given to them. Maybe there's other information being given to them by someone else that has a bit more, not experience, but have done the research, or it's in their professional sort of line of work. Whereas it's come to their, I wouldn't say their loss, but it's come to their to the point where they've gone, all right, well, I'm right. It's my way or the highway. So I think that instead of trusting information too much, as we were talking about before, the analyzer, it's almost just trust the right amount of information, just a little bit, to make a decision. Like racing a decision's fine. You can make a decision to buy anything in 10 seconds if you've got all the information there, right? And there's no time frame. Wait 2 weeks to buy, or wait 2 weeks to think about it. Sit on it overnight. Like if you've got the information there and you can pull the trigger on something, go for it. Do it. But what I'm saying is that when you're given the information, don't block it out right away.
So don't act on impulse, or don't just trust that. You do the homework. Yeah,
like I have people close to me that if you told them that the sky was blue, they would tell you it was red, right? It's just them. It's just their personality. Like I don't know if it's an argumentative thing or if it's an I'm right thing, my way, the highway. But these are the people that I always come across that will impulsively buy on their decision, and and then they'll tell you that there'll be 50% of the time where they'll give you the thumb up and be like, it worked. But then there's the other times where you don't want to say you're right, but if you trusted what I said a little bit, maybe a little bit more, or trusted what someone else said a little bit more, you might have come to a better decision.
I feel like you're skirting into the armchair expert. That's that other persona where we work with clients that know it all.
Yeah, I get
hammered. I know everything.
Yeah, I get hammered by it because out of you two, I'm the youngest. So, and by not that far, but by a fair margin, right? So I have to make sure that everything I say, or everything that I'm going to tell them, whether it's on an email or it's over the phone, or whether or not, but they're putting a big decision in my hands to make. And I'm majority of the time, that they're maybe 4 or 5 years older than me on average, right? And that's where the armchair expert comes into play. Probably what gets attracted to me most, because they feel like they can tell, just don't distrust it. I'll trust someone who's more of age, if that makes sense. And that's what, I don't know. That's what falls into my lap a lot, I think.
You catch them because they think that you're a young fella and they know more than you, but they don't know that you've cut your teeth in one of the hardest parts of Sydney's market, one of the most competitive industries, and you've had to work 10 times harder than everybody else around you because you haven't got a beard.
Yeah. Yeah, exactly right. Well, I don't have the best tailor-made suit going around, so
Yeah, look, I had this when I was 16, so people just thought I was 30. Now it's,
well, you shaved before the podcast started, so
yeah. Yeah. Well, that was last week, right? And you guys were giving me shit about my upper lip or something.
No lips.
So anything else that we want to talk about these personas and people and what's going on, and any messages for the ones that are out there? There you go.
You go. No, I guess the message is everyone's different. Everyone's approach into purchasing or in their research way is unique to your own way, and I guess that's fine. Don't try to contact or try to speak to someone that's in the field and try to debunk the information that's given to you. That's counterproductive to your goals, to you eventually purchasing. I think my advice would be, simply put, is have an open mind, understand that the information's there, do your due diligence yourself, and take that leap of faith. Don't procrastinate. You've come to this point. You're chatting to someone that's that's giving you advice. Take that advice on board, and have some courage in getting involved, I guess. And if you know yourself you're a headache, don't contact us. Don't really. It's don't. If you're a procrastinator and you want more information, I understand. But if you have no intention of doing anything, I really suggest when you are ready to have serious conversations, contact someone or in the field.
Yeah, you're right. They can go jump on Wealthi Academy and just spend hours in there learning everything about property.
Yeah, sign up for free today. Eh?
Yeah. What about you, Louis? Any odds and sods about the people that you're talking to? Any?
I think I want to. I'm dealing with a few at the moment who are speaking to us back and forth and sort of going around, around the circle of going to invest, going to look out and do something. And I think I found what the perfect investor might be to me. And we sort of touched on this before, like if you do the right balance of your own amount of research, your own amount of listening and talking and going back and forth. But my probably biggest thing is just when you feel the time's right or when you've done it, just pull the trigger to do something about it. And probably it's going to go off what Sam said before. Either pull the trigger and don't do it, or pull the trigger and do something, but make a decision and then make it happen. But don't roll around on it forever.
Yeah, I completely agree with you. I think once you start making those decisions, it tells you what your gut is. I've got this thing where this is kind of on the topic, but kind of not, where when I'm deliberating with a friend, we want to go do something or not, or they tell me, hey, Dom, I'm thinking about doing something. I'll say, heads, you're going to do it, tails, you're not. And I'll flick the coin. And before I show them, I'm like, what do you want it to be? And that action of like having to make a decision will tell them, their gut will say which way they want to go, whether it's yes or no. And it's kind of like they'll either feel like they're missing out on it or they actually want to go and do it. So it's a little game that we play to sort of figure out what way do I want to make a decision. Nonetheless, I do say that everyone that's out there, obviously go and verify the information that we give you, because it's a lot of work's gone into doing it. But as Louis said, you can spin yourself in circles, disproving or proving. It's, I think, conceptually trying to understand how we came to making the decision. Because if you pick out one little fact in isolation, it can be read one way or another. But if you look at it in its entirety, a picture will come through, and that will help you either make the leap of faith or say, listen, it's not right for me. Now, Lou, I know that you and I were talking about there was a bit of an article I posted the other day where we're just talking about the difference in prices between apartments and houses.
Mm.
And there was a graph that we shared around where basically over the past 10 years, you can kind of track, and Jenny will put this up on the screen for the people that are watching, but a long story short is you can see how houses run fastest and hardest, and then apartments follow them very, very closely. The graphs are basically almost identical. And essentially over the past 10 years, the houses have been running further and further away, but now it's at a point where they're 50-something percent, 54% higher than apartments, and we all anticipate that apartments are next to run. What do you guys think?
I think apartments have I think one of the biggest things that holds them back is the stigma. Like, I feel like if you're investing in an apartment, it's like automatically, like what a shit investment. What a good decision that was, But Dom, you probably attest to this. I mean, you got into the market correctly with an apartment, is that right?
Yeah, I've got a couple of apartments.
Yeah, but it was your first first purchase. It was an apartment. I don't know. I think that everyone wants to buy the best asset possible. And I'm not saying to buy something shit and make it and because it's just your first one. But I think that the apartment stigma to the point of this is that I reckon that maybe a factor that people didn't consider was just the aura or the stigma around it is that because they're a lesser investment, I think that the gap gained distance on each other. But now that it's closing, it's like any market. When you see it, when people see a graph and it starts to close, like, it gets a little bit more momentum. I think that I don't think that it's ever going to be one or either, or going to be a better investment than the other. You can get great investments in both asset classes, but I think that the gap will come closer with the right. I will say as well, just to reassure my point, with the right investment though. Don't get me wrong. You can invest in a pretty shit house and it's going to go backwards, or you can invest in a really good apartment that's going to go forwards. But I think the gap will lessen as we move probably over the next, I reckon maybe the next 2 years, especially in Melbourne. I think
definitely. I think traditionally homes always outperform apartments, but what we've seen in the Sydney market and other major cities will follow suit is that Sydney homes become too expensive, so people resort to purchasing apartments, and the demand then gets heated on apartments, and prices start to rise. The fact is other capital cities is that what you can buy, in context of prices worth of apartments, you could probably buy them in homes in other capital cities, but it will eventually get to the point where it is where Sydney is today, and apartments will become very valuable, although prices will appreciate, strongly over time. So the stigma is that, land components are more valuable, and I completely agree. But I assure you, apartments are definitely going to catch up to become, a priority option to purchase, which in effect means more demand and means more appreciation in price.
Yeah, I agree. And it's interesting because I think that you're right. Houses are the ones that grow the fastest and hardest. Land is the best. But you shouldn't discount apartment just because you're buying an investment to achieve an outcome. And if the outcome you want is to create equity to then buy another investment, and all you can afford is an apartment, or the apartment is what is going to be closest, or it's going to have certain advantages from taxes or from government grant, and there's reasons why you should be buying an apartment over rather than waiting for the house. I'd say jump into the apartment. Use it for the reason that you're going to get equity, you're going to get your depreciation, you're going to get your cash flow, and you can buy your next asset after that. It may be a house is your second, third, or fourth investment. So long as it gets you to that outcome, that's what's important, I think.
Yeah, I agree.
Population growth, I reckon, is countering supply is probably, the easiest metric to see value go up in, I think, the apartment space. If people keep coming to the country or people coming to the city and they got to live somewhere, like, it's, you look what happens as what Sam said, into other capital cities, like population's a big thing, but London's, New York's, everything, there's no more space. And as we know,
yeah,
go, Sam.
No, and don't be a narrow-minded investor. Don't be so spoiled in the fact that you need to buy a home first to gain equity, to get that second or third. The options are out there. There are actually good options, good dwellings to purchase for you to get closer to, say, your Australian dream with, an unencumbered home in 10, 15, 20 years. People think that the only way to go buy it is to buy and pay off, but there are other avenues to expedite that process of you getting to where you want to be in terms from a property ownership standpoint. So apartments are not to be looked down upon. I think that's what I'm trying to say.
I agree. There's developers now, they build to rent. They're buying chunks of apartments. They're going to go rent them out because the yield is there. And if ultimately the cash flow scenario is what you want, the yield is stronger in apartments. And, I really find it funny, particularly in Sydney, where, a lot of our clients are living in an apartment. They don't want to move into a house. They love their apartment, but they frown on apartments. We've got some couple clients that are living in the eastern suburbs or the north or whatever. They're living in an apartment because it's close to the shops, it's close to the beach, it's close to the work and lifestyle and amenity. There's things that you get in an apartment that you don't get in a house. I love my apartment in St. Peter's because it was right next door to Newtown. I had a really good quality of life. And to go and buy a house was going to cost me $1.5 million, where the apartment was $750,000. Now, those apartments are worth more than $1 million, and the townhouses are $2 million. So the price growth is still there.
I agree. Yeah, I agree. And like what Louis said, just waiting until the population grows. New York City alone is 8 million people. We've got 6 million here in New South Wales. And if you want to compare the sizes, it's, we're, I don't know how many times larger. So eventually we'll get to that point where things are getting up, and to buy something that's in the S is going to be, very expensive. Sydney's already that, but just in context to other, other main cities around the world, it's pretty pricey.
What's the word in the street, fellas? We're sort of rambling on apartments. Enough about that. We know they're going to grow. What's happening? What are you guys seeing? What do you want to put out there before we wrap up? What are you seeing?
If you haven't bought, you're still missing out, and that's the truth. If you haven't bought yet and you're still thinking about it, I assure you, you're missing out.
In fact, I got a message. I know that one of my cousins is probably listening to this, Carlo. He's probably listening to this. He's sitting on a highway driving 1 hour to or from somewhere. And his wife messaged me the other day saying, "Hey, Dom, is the market slowing down?" Because he saw our last podcast. I'm like, no, it's not slowing down. It's getting worse. And I know so many families like him that are looking and holding and waiting to go buy something at an auction. Every time they go, the price is $200,000, $300,000, $400,000 more. And it reminds me of your client, Sam, who was kept on going to different auctions. And you said, what are you doing? Go and buy a fixed price asset, not something that's going to go compete at auction and some crazy people with more money just going to keep on outperforming. So go and buy a fixed price asset. So Carlo, Megan, buy a fixed price asset. Go buy something that will work, and
that client,
him later.
And that client still hasn't bought.
How much has the market moved? You've been talking to them for 6 months, roughly?
Yeah, I would say till around the start of the year, around end of January. What's the saying? You lead the horse to the water.
You can't make it drink. No, I've said all my thoughts today. I'm done.
Me too.
You done? Okay.
I'm done.
Fellas, it's good catching up as per usual. I do like this version of the view, and to all of our guests that are listening, please reach out. Let us know if there's something you want us to talk about. Last week, someone came back with a few different ideas, and we're going to be hosting next week. We're going to talk about some major problems and issues, because we talk about all the good stuff and what goes right. Today, we spoke a little bit about what's going wrong, but I would like to uncover that in more depth. If there's anything that you guys are seeing or hearing, just let us know, and Sam, Lou, and myself will talk about it. So happy investing to all of you out there. Catch ya.
As always.
Yeah.